now you should all see my slides, which I can play with today. And we can get started. So I'll just do a last quick check. I'll just see the chat. Just let me know, give me a 1 or let me know in the chat if you can see my screen. And okay, sweet. Thank you. I appreciate it. And we'll get to work. Let's get it. Okay. Yes, yes, yes. 1, 1, 1. Cool. Thank you. All right, guys. I appreciate you all. Cool. So let's start with today's training. I'm super, super excited to get started, guys. We're going to talk about Rollups 2.0, which is basically a case study on a 62 million EBITDA business that basically happened in 4 months, like less than 6 months from the idea to executing on that and bringing it to where it is right now, which is pretty fascinating. Using growth model, combining business roll-ups and acquisitions. Let's get to it. So I want to start with kind of like how people grow businesses right now, right? So let me know, what are you doing right now? Think about what are you doing right now to grow a business, right? So if you have a business, what are you doing at the moment to try and grow it, right? So I started by writing down marketing, sales. If you want to think as well about it, let me know, like, what is the kind of like 99%, what 99% of people are doing in order to grow a business, right? So a lot of people use marketing, they go out there, they run ads, they do cold outreach, they do, what else they do? They do social media, etc., right? A lot of you are much better than in this than me. You do a lot of marketing, then you do a lot of sales, basically whatever you can do to improve your conversions in sales, right? If it's to have different funnels or whatnot, better sales conversions, accountability, etc. What are some other stuff people are doing, right? You can say grow. I can expand on this forever, but it's basically the idea of growing one client at a time, one employee at a time, one product at a time, right? So it can also include R&D. It can also include things like basically scaling with an org chart, right? Hiring more people, building different departments, keeping everyone accountable, having better leadership, etc., right? Coming up with better ideas, better products, probably retention is here as well, right? What can we do to basically have clients staying with us and coming back to us on a regular basis? You probably all heard about those things if you're here on this call. 99% of books, seminars, courses, masterminds, business opportunities are talking all about that, right? But here are the 3 problems that I found with this model and why I'm so excited about this world of acquisitions. And I've been involved in this for years now, and why I'm super excited about the model I'm going to share with you today, which is roll-ups of companies. So number 1 problem is that it just, I mean, I'm sure some of you, and let me know if I'm wrong, felt stuck, felt like you're playing small, which is what I felt for many years. You know, like when you're growing a business, especially if you grow organically, it just, at some point, it just feels stuck and you feel like you're playing small. And if you're not there, then I salute you and I'm happy for you. But I know for me, it was a big struggle that even when I bought a business or when I grew a business organically, at some point, if you're at the 7, or some of you are lucky to get to 8 figures in yearly revenues, from that point, it's very difficult to grow at the same percentages each year. It's just super difficult. And the fact that you're even making 7 figures, 8 figures a year is almost a miracle if you can continue with those numbers on a regular basis, because most businesses are not going to be alive for more than 10 years. Like, those are the stats out there, right? Not inspired by people around you. That might be another thing, which I know for me is definitely a very important. Like, who are the people around me? Are they exciting me? Are they challenging me? Are they inspiring me to grow and become a better version of myself, the person, you know? So that's definitely, and I don't know if it's important for you. I know for me, it's huge. Like, I want to have the coolest people ever around me. I want them to think big. I want them to partner with me. I want everyone to make tons of money. And I want everyone to be involved in things that provide value to the marketplace and to the world. And obviously, I want everyone to build amazing, tremendous wealth from doing so. 3, you want to play with the big guys, which is kind of like, in addition to what I just said before, I mean, that's kind of like what led me to this idea of a roll-up. And And I'll share with you the story of Michael and how he even got to that. He got to that from one of the trainings that I had 3 years ago and a small roll up that I've done. And it was like, man, I just took that. I went all in on that. So playing with the big guys, like at some point, like, yeah, you can make a few millions of dollars and you can probably retire at any point if you want, and you don't have to work if you don't want. But then for some of you, you're probably there already. You made some money. You probably are not that, you're not in scarcity for money. You can live a great lifestyle. But then at some point, you need to decide, am I willing to settle? Am I fine with where I'm at right now? Now, I'm not married. I don't have kids. So I'm sure it's different when you have family and kids, that you can, like, it basically might become your new obsession, which I can see that happened. But for me, I just got to a point where I was able to travel all around the world, live the lifestyle that I want. And at some point it's just empty. And you're asking yourself, that's it, right? So for me, I know one of my biggest motivations is just, I want to play with the big guys. I want to be out there with the elite. Like, I want to play at the highest level with the biggest numbers, biggest businesses, and just be able to play at their level. I don't know if I'll be able to be LeBron James, but I want to be able to play in the NBA with him, alongside him, right? And in our case, I want to play with the big guys in business. I want to make big numbers. I don't want to settle for a 7 or 8 figure business in revenues. Not excited, lead to depression. I can tell you it was a big thing for me. Like, when you have money and you don't have to work anymore, and and you're stuck and you're still not excited to wake up in the morning, you're not happy, you pretty much, like everything externally, I felt like I had it, like the best restaurants, the best travels, the best parties, the best whatever, the best relationship, whatever you think externally should make someone fulfilled, just make me fulfilled. So again, right now for me, the biggest thing, I want to wake up and I want to feel excited. Like, what will make me excited, right? I want to wake up, I want to feel alive. And hopefully, even if it's resonated with one of you, I think this training is worth it, because this training is pretty much a reminder for myself as well. And I think it comes down to, you don't want to settle for less than you can be, do, have, or give. That's what it comes down to me. That's what I wake up in the morning. It's kind of like, why, like, what else we got to do with our life, right? So that's a bit of kind of like the overall way of looking at things. I know that when I work on things, I want to play with large numbers. I don't want to play with Dogecoin, which maybe you made some money with it, maybe you didn't. That's not what I'm referring to. I'm not telling you go and put your money in crypto, but I'm saying that when I'm playing in business, I want to create capital events, right? I want to work hard for a while and then be able to bring in multiple 7 figures at least. Like, when I'm saying bring in, I'm talking like bringing it like cash after taxes in my bank account. That's what I mean, right? I want amazing cash flow, ideally, perhaps while I'm having the investment, or at any opportunity that I have. Obviously, cash flow is very important. That's coming to me on a regular basis. We all want that. And I want to do it with awesome people, a community of people that I enjoy being with. And I think, again, I think I still have many, many more years in business that I'd love to be part of. But I think that every day that goes by, I realize how much I just want to do it with people that I love, people that I enjoy, people that I respect, people that I just enjoy solving big challenges with. And I think this opportunity of creating roll-ups, which a roll-up is, and we're going to talk about it in a second, is basically just bringing a lot of great minds together. It's bringing great companies together. And when you all have, I found that one of the best way to connect with someone is that just to have like a similar road, similar path that you both walk on. It's one of the best ways for you to really connect with people. And when you bring those awesome business owners to one group, it's just, you can create such great harmony of amazing people that you want to be around, that everyone just want to win for the sake of winning as a team. And everyone is happy to see everyone else successful, because it's just a win-win for everyone when the company, the overall biggest company, is growing. And yeah, I want to top dollars if I'm willing to sprint. I rather sprint like work. And I think that's what the deal making world is kind of like when you're doing deals, like it's funny, like there are periods where you can work like 24 hours a day when you're about to close a deal, when you have something important to go through. There are periods where there's not much going on. So I don't mind sprinting, but I want to know that if I'm sprinting, I can get top dollars from it. Right? And I want to work on something bigger than myself. I think we all want to some extent. Like know that we wake up in the morning and we work on something bigger than ourselves, right? That we can create impact, that we can help the community, where we can save jobs or create jobs or help people with their retirements, in our case, where all the baby boomers are going to retire in the next few years. So I want to feel like I'm doing something meaningful. I want to feel like I'm creating value in the world. I want to feel like what I'm doing matters. And obviously I want to make a lot of like tons of money from doing so, right? And ideally, that's what I want to focus on, right? Vision, strategy, deal making, acquisitions, mergers, exits, versus dealing with the day-to-day stuff, right? Like most of the business owners you're talking to, they're dealing with the day-to-day stuff. And when I'm saying day-to-day, I'm talking like they're involved with the marketing campaigns, with sales, with operations, with creating new products. And I'm not saying that there's anything wrong with that, but as you grow, the goal for you should be to be more involved in this. The more you can be involved with the vision, with the strategy, with deal makings, with acquisitions, that's where exponential growth can really, really happen. So to summarize that part, I'm willing to work hard, but I want to make sure those goals are worthy of me. And again, this presentation is for me just as much as it's for you. It's reminders of like who you are. Think about it, like who you are. What do you want? What are your goals, and are your goals worthy of you? Are those goals that you wake up and you just can't wake up to wake up in the morning? You can't wait to wake up and you're just jumping out of bed excited because you know you're working on something so big, so massive, can create such an amazing impact. And that's why I started with this intro, because I think we all understand that when we have that real like purpose behind us, like we have this fire in us that just want to go out there and pursue, the sky is the limit. So, but how do we do that? All right, so let's start to talk about that. And this is what we came here for. So let's start with so it's going to be this is our training. Oops, let's make it smaller. This is our training. We're going to start with the exit, right? We're going to talk about that because we got to have the end in mind. That's what we're going to talk about today. Like, unless we have the end in mind, it's not worth it to even start with this roll-up. Then we got to think about the sector, right? And if you stay with me until the end, I'll let you know how you can get access to all those slides with my amazing draws on them. Sector, you got to pick a sector. You got to stay focused. The more focused you are in life, the better. Period. I know I could make so much more money in my career, if I could call it a career in business, if I would just be more focused on just narrowing down whatever I'm doing, just narrowing it down a bit more. And then today we're going to talk about deal flow. So when we have the exit in mind, when we start with the end in mind, when we pick a sector, we're going to have a practice on how to pick the sector. And when we have a process to bring in deals, that's where we can start to build that roll-up that we all are thinking about. So this is what I want to share here today. And this is a drawing that I created. Let's talk about that. So, right. So why we're even doing a roll-up? What is a roll-up? So again, in a nutshell, a roll-up is bringing few companies together for the sole purpose of creating one larger company. Right. This is pretty much what we're doing. And what we're doing is pretty much going to companies and tell them, hey, I'll pay you. Again, it depends on the sector, it depends on the location, it depends on the size of business. But the promise is pretty much, hey, we'll pay you whatever, 2 or 5 times X on your business. And the goal is to eventually bring few of those companies together and sell them or raise capital or IPO for those numbers. Because it depends on the size of the business, right? So small businesses usually trade at anywhere from 2 to 5 times. That's based on, if you go out there to Biz Buy Sell Insight reports, you'll see that those are the numbers, right? Most small businesses. And when I'm saying small businesses, on average, they're doing, let's say, between 100,000 to a million pre-tax profits. Those would sell for around 2-3 times EBITDA, right? The larger they go, the more they'll get multiples on their EBITDA, on the pre-tax profits when they sell, right? The more profits the business have, the more revenues the business have, the more recurring revenue the business have, the more clean financials the business have, the less dependent the business is on the owner. There's a lot of different ways of looking at why a business will get a higher valuation than others, right? But in a nutshell, the promise is, let's go to a few businesses and tell them, hey, I'll pay you this, right? And then the goal is to bring them together and sell them, raise capital, or take them public at those range. You know, I said 300 because if you look at companies like Tesla, I think last time I checked, are trading like 350 times EBITDA, which is insane, right? I'm not saying that those are the numbers you're going to get, but I'm saying that's what's possible when you're a public company, right? 12, you see a lot of 12 times or 10 times when you're selling to a private equity firm or a family office. And to get to those range, again, it depends. A lot of private equity firms I see right now are starting to look at smaller deals because there's a lot of private equity firms out there. But you see anywhere from, like, when you're at 1 million EBITDA, you start to see some private equity firms come into the play as well. So that's the goal, right? Buy this, sell this. Now, how can we do it with no downside to us or the sellers? And this is the case that I want to share with you today, right? So in a nutshell, what that looks like. So our guy, Michael, that's what he did. He went out there, he told those companies, hey, I'll buy you for X. And I'll pay you that only if and when I do one of those. And this, let me just go through the options, right? And I'm going to talk a bit more about that later on the options, but it's pretty much exit. It can be capital, right? You can raise capital, or it can also be an IPO, right? So right now we're working with him, with Michael. We partner with him to go out there and potentially take his company public. I told him, hey, Michael, I'll invest the money to take your company public. And it's a 7-figure investment. I'll put all the money, let's take it public. You already have money from private equity firms that pretty much gave him $50 million in equity and $100 million like in combination of debt, lines of credits, that he can use to go out there and buy those companies. So some of those companies he bought or buying right away. Some of them will be purchased if and when we are a public company. And that's the beauty with the no downside, because you go to those companies and you tell them, hey, I'll pay you, you can literally go to a company and tell them, hey, how much do you want for your business? Cool, you want 5X? No worries, I'll pay you 5X. You'll get it if and when we are a public company. And if you're not a public company and we can't basically give you that promise, then we're not going to buy you. You're not going to sell. And either way, you're going to run your business, which you are running right now anyway, right? So that's the promise in a nutshell. We're taking a few of those companies, and I'm going to expand on that. We have a lot more slides to go through, but he basically took 16 companies, right? Brought them all together, as many, how much we have to, for whatever. Let's imagine that those all are 16. He brought them all together with this promise. And guess what? Guess where he's making money? So when he's promising companies that he's going to get them for 5X, he's going to pay them 5X. As soon as you're raising capital at 12X or 20X or 30X, you're making the difference for yourself, right? So you can play with the numbers. Let's say, for the sake of numbers, of keeping things simple, right? Let's say you have a 1 million pre-tax profits business that you are paying 5 million, right? You basically told them, hey, we're going to pay you 5 million. That's what you want for your business. Cool. Then you go out there. So that's 5X EBITDA, right? And then what if you can raise capital, or let's just say let's say you bring 10 companies like that, 1 million. which is pretty much what he did, just did with 16 companies, right? So for each of them, you tell them, hey, I'm going to pay you 5 million. You tell this guy, hey, I'm going to pay you 5 million. You also tell this guy, hey, I'm going to pay you 5 million, right? How many you have here? Let's say you bring 10 companies, again, just for the sake of keeping the numbers simple. So you have 10 million in EBITDA. And EBITDA, if you don't know what is it, pretty much just think about it as a pre-tax profits for a business, right? So you have 10 companies, right? Let's say this is 1 to 10. 10 companies, each of them you're paying 5 million. So how much you need to pay them, guys? 50 million, right? That's what you promised to pay them. Now, for them, for each one of them to get 5x on their 1 million is more than a good deal, right? How good it is for a company to get 5x. Or you know what, if they're not accepting 5x, cool, promise them 6x. And I'll show you in a second why you can do that. Because now, okay, so this is basically the enterprise value, the initial one, right? This is the number you write right now, the combined one, right? And now, because you are 10 million in pre-tax profits, you can easily raise it to 10x, easily. And again, I don't want to exaggerate the numbers, but easily 10x it. So you can basically raise at $100 million valuation. Sorry, yeah, 100 million, but it should be here. First time I'm playing with this app, and I really enjoy that. So again, 10 million in EBITDA. You're paying them 50 million, and you now raising at 100 million. So that's the arbitrage, right? And arbitrage is basically buy low, sell high, right? Like good old arbitrage. So this is what we just did here. And hopefully this is not overwhelming and it's clear. So each company that you're talking to doing 1 million, right? Total, they're doing 10 million. Now, the purchase price is 5 million for each of them. Total, you're buying them all for 50 million. Because you're now controlling this, so you're now controlling this enterprise. You can easily raise at a higher valuation, right? Because it's 10 million. Obviously, there's due diligence, depends on the institution, depends on the investors, depends if you're going public, which banker you're dealing with, etc., etc. There's a lot of nuances, right? But you could easily get on 10 million EBITDA if it's a fast-growing company at 10x multiple when you raise capital. That easily, guys. There are companies doing that on like multiples of revenues, right? And again, I really hope I'm not overwhelming people. If like your newbie, it might be too much over, like too much over the top. But I'm just excited to talk about that. So hopefully, for those of you, and if you don't understand it, we'll just send you the recording, and it might make sense then. So again, guys, we have 1 million. We paid them 5. We now have this combined group doing 10, 50, and we raise capital. Everything that's money, let's do in green. We raise capital at 100 million. So what's the difference here? And that's assuming we're private, guys. When we're a public company, those are the multiples we're talking about. And just to give you an idea, so Michael did it with 5x, and then he have a public company similar to his in his sector that's trading at 32 times EBITDA. So he basically bought companies at 5, have a similar company traded at 32 multiples, which is insane. Think about the arbitrage. Just based on this example, you basically created yourself 50 million in value that goes to your pocket in stock, obviously. With what? With talking to, in this case, just 10 companies, 10 leads. Anyway, hopefully this is starting to get you excited. So let's talk about 3 key strategies, right? We start with the end in mind. And again, maybe worth going through this just really quick, guys. We're paying 50 million. We're raising it 100 million, because I see a comment on that in the chat. This is where we make our money, here in the difference. You basically created yourself 50 million in value because you raised capital at 100 million valuation, but you're only paying 50 million for it. There's 50 million left, right? And again, this is one structure to do it with, right? But this is pretty much one of the best structures to do it with, right? There's other structures you can do it. You can also go to those businesses and tell them right away, hey, let's merge all of you. I'll take 20%. I'll take 10%, 20%, 5%. Investment bankers sometimes do that. I'll take 1%, whatever you're able to negotiate, right? And then you negotiate your structure right away. But this is such a more exciting process to do it. This is what we're doing right now. We're taking it public. We're deciding the valuation, because guess what? Valuations on businesses is very arbitrary. Like you see valuations on companies like Clubhouse at the billions of dollars with businesses doing no revenue whatsoever. Here you have revenues, you have profits. There's like legitimate reason for this valuation. Anyway, hopefully this gets you excited. This is where your money comes from. You basically get those businesses at X, you then raise capital at 10X, and you make the difference. In this case, in this example, this is what you're left with. Now, I'll share with you later more with Michael's number. Michael's numbers are much higher. Maybe I'll even talk about it for a second now. See if I can. I think it should move everything at once. Let me see if I can move it. So let me show you Michael's numbers. And remember, there's no downside to you or the business owner. You just go to those businesses and you tell them, hey, I'll buy you for X. And if I don't do that, if I don't bring the capital, you have nothing to lose, right? Oh, come on. All right, so let me show you Michael's numbers. So Michael went out there, he got those businesses for 5X, and then he's raising capital somewhere in between, but we're aiming for this. You have a public company doing 32 million. You have 16 companies doing total of 62 million in EBITDA. 62 million in EBITDA. Multiply that by 32. That's 1.9 with a B. Michael pretty much created an entity that's worth. Obviously, we're going to partner and take part of that as we're going to be a public company. But he pretty much created an entity worth $1.9 billion if it was a public company right now, if it was traded. Hopefully, you're starting to see what's possible, right? And how much you need here. And I started, remember how I started the training? I told you, hey, how do people usually grow businesses? They use sales, marketing. How difficult it is for those of you who have businesses, how difficult it is to get a client, right? Obviously, everything in perspective, but running a business is difficult. Managing employees is difficult. Guys, here, don't get me wrong, this is not easy, but you only need 16 leads. You only need 16, like in this case, 16 people to say yes. Obviously, build yourself a funnel and go through the process. Make sure you talk to enough people. We're going to talk to some strategies on how to find those deals. But this is what's possible, guys. You only talk to 16 people to create a 62 million EBITDA operations holding company. And then you talk to those, we're talking about those numbers at the exit. That's what we aim for, right? That's the promise. And guess what? There's a lot of arbitrage in between that an entrepreneur can take home. Anyway, let's get to work. So 3 strategies, what do you need to do? So remember, you need to start with the end in mind, right? Let's do some work, guys. So open your notes, start to look at things. I'm going to share those links later, but what you want to do is this. Start to write down. I'll take a sip of water and we'll continue. So start to think about sectors. And I think we have, cool. So we're going to have a training on how to pick a sector, but assuming you already picked a sector, which some of you I know already have businesses or are all in on a specific sector. And let's pick a few. Let's say you want to go SaaS. SaaS is software as a service. You want to go marketing. And let's say you want to go home service. home services. Right, so basically replace those sectors with whatever sectors you have in mind. And we're going to do another practice in a bit on how to pick a sector. What's the best sector for you? I'm just starting here, assuming that some of you already have sectors in mind. If you don't, we're going to get to that as well. So here's what you want to do. You want to start to do some homework and you want to do some research and you want to start to look for what are the multiples in the public market for that sector, right? So I'm just randomly bringing here numbers, but let's say SaaS is 20x, marketing is 15x, and home service is 14x. It's usually more, but I'm just, again, depends on the business, right? Do that. Here's a link you could use to see average multiples, pick your sector, find out. And then you want to start to see, okay, what are the best sectors for me to go and target, right? It's probably one of your first question, right? What sector do I want to target? I'm not going to share the sector that Michael targeted because I know then all of you are just going to focus on that. And yeah, there are enough sectors out there that we can help you take public. Then what you want to do is go and do research, Pubco, like, are they doing acquisitions, right? And it's a simple Google search, guys. It's just looking at the public company, like just literally write down, like in this case, software as a service, SaaS companies, public companies, who I'm thinking about right away. Like we have Salesforce that owns Slack, you have Zoom, you have HubSpot. Those are SaaS companies, right? And then write down the name of the business and write down acquisitions. And you'll see Salesforce, they're doing acquisitions. They just bought Slack, actually. HubSpot, they're doing acquisitions. They just bought a guy in a business. You have like a media business. So they bought them. Zoom, I don't know personally the acquisition they did, but you'll find out the biggest companies in the world, that's how they grow. They're going out there and doing more acquisitions. They're basically in their own roll-up. They're doing pretty much what we're doing, but they're already a public company, right? So, and write it down. Are they doing? Yes. Usually find out that the answer is yes, but you might find that some answer is no. Like ideally find out if they did in the last year, the last 6 months, because some sectors are kind of like going down. Like I'm sure like airlines, I'm not sure if they're doing acquisitions anymore. Or you might find actually the most acquisitions in that sector. I'm not sure, right? Because of what's going on with the market. Also, guess what you're finding right now? You're finding yourself potential buyers, a potential exit opportunity by looking at those companies and searching those companies. So you're not just finding a potential sector, you're finding a potential exit for you, right? Then this is also really important. Like start to think about the multiples that you have in the private market, right? So in SaaS, really depends on the sector and the growth. Let's say marketing is 3 to 5. Also depends on the size. Home service also, let's say 3 to 5. SaaS, man, you can see here even 10 times on revenues. Depends on the growth, right? So write it down, have it in front of you. And this is kind of like the first check. Before you get into anything, you got to start to do your research, right? What is the best sector for me to target? What are big companies out there in the market that are doing something similar? Are they doing acquisitions? Can they be my buyer perhaps, right? Because one of the offers that Michael got right now is basically to buy everything that he had right away. So far, the offer that he got is not as exciting as taking it public, but it's an opportunity and you can make a few $1 million. Like I'm talking like probably in his case, like 8 figures, like right away in a few months, just by selling the whole operation right away to a business that's already can handle that already a big one, right? And find the multiples in the private sector, find out what you need to deal with. Because for example, if the multiples are very similar in the private market and the public market, it might not be as exciting. And that's why I wrote down SaaS. SaaS actually, or technology in general, can be very something like that. Like in technology, like you see a lot of private businesses are 20x, 50x, and some of those businesses, man, they don't even have revenues. Like especially like with the VC world, they're raising capital at crazy valuations because they can always like raise again with the next fund from the next round. And I mean, don't get me wrong, there's a lot of money there, but it's kind of like it's not really what we're doing. It's not our business model, right? So you need to think about it and be careful. Is that the sector you want to play with? Is that the sector that you have enough arbitrage to work with, right? All right, let's move. So picking a sector, how do you pick your own sector, right? Let's write it down again. So again, maybe you have like 3 sectors you're thinking about. Maybe you have background in e-commerce, or maybe you worked in the past in retail, or maybe you again worked at like I don't know, healthcare, right? Write those down and start to think and start to rank them from 1 to 10, right? So if you have experience in e-commerce, cool, write it down. Yes, I have a background, 10. Retail, I mean, I worked in, I don't know. I worked somewhere when I was 19, so I know I have a bit of a background. Healthcare, I know nothing about. I visited the hospital once. That's right. Start to think about it. E-commerce, I mean, yeah, I have a background, but man, it sucks. I don't want to see that sector anymore, right? So passion, nothing, right? Retail, I mean, do I have passion about it? I mean, I'm passionate about stuff that Amazon are doing. Can I be passionate about other stuff? Maybe. So, start to rank those things down. Healthcare, etc., etc. Contacts. Do you have contacts? Do you know people? So obviously, if you have some background in the sector, then yeah, the answer might be, the answer might be, let me just quickly check something. So yeah, sorry, I just want to make sure we're still recording, it's working. So contacts, maybe you have contacts in the sector, cool, write down 9. Retail, man, I worked in whatever, in a retail store when I was 19. I don't know anyone. I mean, I'm not in touch with anyone. And healthcare, I don't know, maybe my uncle is on the board of a public company, so maybe that alone is worth it, of figuring it out, right? Because maybe just one contact here is worth a lot. Or maybe I know whatever, in e-commerce, someone is running a mastermind in the e-commerce space, and I know just his contact alone might be availability for me to access to a lot of deals, right? So start to test it out, and this here should be average. Average. Oops, let me technology. So this is average, right? And start to think, okay, what's the average here? Because sometimes we make decisions too emotional. We're too emotional when we make decisions. So sometimes doing logical stuff like that makes sense. It might be like, oh, why we're doing that? But remember, you might spend the next year on that. So I think it's worth putting some effort into that. Right? What about Forbes? This is something I really like. Forbes cover or mom test. So what that means? It means that, imagine if I had a conversation with you and I told you, hey, you're going to be on a Forbes magazine cover, and they're going to tell you that you are running this e-commerce multi-billion-dollar company. Are you happy with that? When it says e-commerce, what about if it's going to say retail? What about if it's going to say healthcare? Which one is making you feel better? Also, the mom test, for me, it's kind of like the same. It's kind of like thinking about your personality a bit. Like when you're going to be on the Forbes magazine, or when you're going to tell your mom what you're doing, are you happy with that? Like, are you comfortable with that? Right? But those are questions that I think are really, really helpful for us to figure out, okay, what sectors I want to be part of, right? So rank that as well. Start to rank those things too. So let's say 7, 5, whatever, right? Rank it down. And remember the training we did before that. What about potential buyers, IPOs? I would even had here, like, what about private equity firms or family offices, right? I would start to think about those. Or in some cases, even venture capital firms, if it's technology, right? So start to think about those things. Like, do I have a potential buyer here? Do I see companies that are public in that space? Do I see good potential? So remember the practice we did before. What's the potential here, right? In e-commerce, lots of buyers, lots of private equity firms, lots of public companies. Start to rank those, start to do your homework, and then take those and do your averages and see what makes sense, and make a better decision on what sector makes sense for you to be in creating a roll-up, if that's obviously something you want to do. And we're going to share the link to the group in the end. You can post it in the group, and if you want, I'll comment and I'll see and I'll tell you what I think. So that's that. So hopefully that was helpful, and you um, went through that with me. So let's talk about finding deals, right? So finding deals, how do you find deals? There's a lot of ways to find deals. I want to simplify things because there's only so much time we have today. But the most important thing with deal flow is that you're consistent. So I created here a deal flow calendar, and that's the way you want to look at it, right? We have dozens of ways to find deals. I literally just pick 3 that I like, which are letters, LinkedIn, masterminds, all right? So you need to start to think with yourself and be committed to a schedule. When are you going to send letters? When are you going to, oops, yeah, sample script is coming. When are you going to send letters? When are you going to use LinkedIn to send some messages or create some outreach campaigns? When are you going to a mastermind or reach out to masterminds and find out, okay, am I doing this here? I'm not doing here. Here I'm doing something. Here I'm doing something. And just stay consistent with yourself. And every day when you wake up, look at your calendar and see, okay, what do I need to do today? And maybe today I'm just doing this and I'm not doing those, right? So I'm focused on those, right? So I'm focused on getting this done. So I'm focused on getting this done here. So I'm focused on getting this done here. Otherwise, if we don't put it on the calendar, we just forget. It's not important. We become emotional, and we just are not true to our word. And if you tell yourself you're going to do something and you're not, then guess what your results are going to be like? There's not going to be any results. So I think when I started with this process of creating a deal flow calendar, this what worked really well. With Michael, when I worked with him, you see the biggest thing I think really helped him is the fact that he was committed and we kept him accountable. He was committed to talking to a specific amount of people on a weekly basis. And he had a goal to talk to X amount of people by X time. And he talked to eventually like 3X more people than that. But he started with the number in mind. He knew how many conversations I need to have each day. And he knew, okay, that's my goal today, is to have X conversations, is to do that type of work every single day. Right. And I'm sure some of you are asking, okay, what should I send people? Here's an example. Write it down, screenshot it, whatever you want. But remember, in the end of the day, it's more about the person behind the script than the script. Right? This is just a sample script. We have dozens of those for these different places, categories, or whatnot. Another tip, the more personal the script is, the better. Like the more you're going to show someone, like for me right now, I'm getting dozens of messages each day on LinkedIn. 99% of them I don't even look at because I know it. They look spammy, they look templated, they don't look personalized. It's like the person who messaged me never looked at who I am or what I'm doing or what he have to offer or ask me for is anyway related to me or him. And it literally will take you like another second to do a quick search on that person and show him, hey, I actually looked into you. I know you have this interview or this article or this or that, and showing that you actually, like took another minute. Sometimes the difference between like extraordinary results and just okay results is 1 minute. It's 5 minutes of extra dedication of work. Think about that. I'm telling you, you want someone to respond to you, someone that you care about that will respond to you. Make sure that you're showing that you actually like checked on him. You know who he is, you know how you can help and how he can potentially help. All right. That's the biggest tip I can give you. So this is a quick thing that I think would be cool to see. So here's what's possible, guys. That's the goal. If you have a goal, month 1, to bring 1 deal, right? Let's say you talk to whatever. Some of you will need to talk to 1 company, some of you will need to talk to hundreds, whatever. Make it work. Get 1 company a month, right? So let's say this month you bring companies doing 1 million. Next month you bring in a company doing 500,000 in EBITDA, pre-tax profits, right? By month 2, you're already at 1.5. Right? And then you continue. Month 3, you bring another company doing 500. Now you're 2. There's a great book, The Compound Effect. Slight Edge is, I think Slight Edge is very similar, but it's so important to see like how small tasks every day will eventually lead you to those results. Remember, we have the calendar, we do work every day, and then our goal is just to get 1 deal a month, 1 deal a month. It's like getting 1 client a month. right? Then you're going 1 million. Now you're 3. I don't want to continue to do it until the end, but you got it, right? Guys, very fast, month 5, 6, 7, 8. That's how you get to, if you're Michael, to 16. That's assuming that those companies are doing just 1,500,000, right? What if one of them, out of a sudden, at month 6, you get a company doing 5 million in EBITDA? There's no limits. If you're playing in the IPO game, especially, there's no limits, right? That's how you get to those numbers. And again, remember, he got 16 million in EBITDA. He promised them 5x. Yeah. He's now either received, raising capital, or taking it public at 32x. Right? Created a multi-billion-dollar corporation in less than a year. Is that the end? No, he still got a lot of work. I mean, the guy is busy all day. He's talking to different companies, investors. I mean, it's tough, guys. If you're not willing to work hard, this is not for you, right? This is not again, this is not get rich quick. This is work your ass off and build massive wealth for everyone, for you and everyone involved in the deal, and probably the next generations of your family. This is how you create insane arbitrage, guys. This, you're paying this. And again, for those of you who weren't clear from before, you pay this 5x on this EBITDA. You raise capital, you go public, or you exit at those numbers, or whatever you can negotiate if you exit. And you're making the difference, right? This is you here, somewhere in between, right? So what's the difference between 5x and 32x on this? You make the difference. You make the calculations. But it's, let's just say it's enough for one deal. It's enough, right? So what do we have? Remember, guys, we need to have the exit in mind. Remember, we need to have a sector, and we need to have deal flow. Exit in mind. Remember what we need to think about here. What do we have? Do we have public companies? Do we have pubcos? Do we have private equity firms, maybe? Family offices? Big businesses, perhaps even private? What are the differences in the private sector? So private. What are the differences in the private sector compared to the public sector? Pick in a sector, remember, start to think about, okay, what's your background? Who do you know? What's your contacts? Contacts. Right? Perhaps you have a skill, or you're comfortable with getting access to a specific sector in a specific way. That might be another thing to add, right? What about passion? Or if you want to do the Forbes magazine test, Forbes test, or the mom test, right? Deal flow. What are you doing for deal flow, right? Is it direct, email, LinkedIn? What we mentioned there, masterminds. And again, those are just 3 ways, right? I don't want to overwhelm you right now with the dozens of them we are using. And we gave you a script as well. And what's the goal in the end of the day? The goal is to pick a sector, finding deals, buying companies at 5x, or let's say anywhere between 1 to 5. And then the goal is to sell them for just a bit higher. We don't have to do, I mentioned the 32, like I said, Tesla is traded like 300. We don't have to get to those numbers. Like, heck, even if we just got 7x or 8x or 10x, you don't think it will be enough money? Right? Think about it. It's pretty straightforward. What if we just got 8x? right? So we got 10 companies, each of them doing 1 million. We got it to 10 million in EBITDA. So that's the group that we created. And what if we just got it, for 8x? So we basically created, one second, let me make sure. Okay, so 10 million, that's the EBITDA number. And then we're paying 50 million, right? Here, we're still at 10 million EBITDA, but we're raising, we either do an IPO, exit, or capital raise at 80 million, right? You just created yourself a 30 million arbitrage. Yeah, is it easy? No, it's not easy, but it's simple. It's going to take hard work. Yes, it is. Are a lot of people going to tell you, no, go screw yourself? And again, don't get me wrong, even with the deal flow, there's a lot of nuances that we can talk about. Probably I can talk about it like in general, this acquisitions world for ages, right? How do you position yourself? Do you position yourself as an individual or as a team? What do you do in your first conversations? What kind of offers do you make? Obviously, all the legals that to make sure that you're not getting screwed on the way, right? When do you use accountants, lawyers, or bankers? When do you go public? When do you position yourself? Are you positioning yourself as one company or separate companies or as a group? There's a lot of nuances that we can probably expand on maybe in a different workshop, but I think this will give you a good idea on how to start with this and how to look at it. Right? And again, with Michael, we're talking about 36x. Right, on 16, sorry, 32, I think the company was. 32 multiples that the public company that's doing, and again, this is business doing 16 million, 62 million, oops. And I'll share with you, I should have sent you like a screenshot of all the, he sent me all the data on Dropbox of all the agreements signed. It's pretty amazing. So I'm trying to think if I missed anything here. So that's pretty much the promise. That's the idea, guys. Oh, okay. That's probably really good to go through as well. So what are the options for the seller, right? So for the seller, there's a few options for him. That's probably one of the questions. So you can either exit outright 100%. You can tell him, hey, I'll pay you 5x. You can either have a partial exit, which is, hey, I'll pay you 5x, but I'm only buying 20% or 70% or whatever is negotiable. I don't have another green here. Oh, there you go. Or you can just do a stock swap, right? So this might be too advanced, but I'll talk to it a little bit. Exit outright, what it means? It means as soon as we get to an agreement, as soon as we close the deal, you get cash, right? 100%. Cash 100%. Might be seller financing involved, earnouts, depends. But let's say, to keep it simple, cash 100%. Partial, this is interesting, right? And this is also all negotiable. That's the beauty. So partial, one example would be, okay, so he's selling 80%, or let's keep it even in a more nice way. Let's say a business owner is doing $1 million and you want to sell 20% because he want to pay his mortgage, or you want to buy a second house, or whatever it is that will, or you want to buy himself a nice car, right? You have a life crisis at some age. You want to buy himself another nice car. So you want to have a partial exit. You want to get access to some capital, and you come in with him with the offer, and you're like, hey, you know what? I want to buy you. Sell me whatever, 20%. So it's definitely doable. You can basically agree on just buying 20%, and the rest of the capital, so 20% can be cash. And the ideal scenario is that 80% will be stock. So you're paying him with the new entity that you created, right? Remember, if we have 10 companies or 16 that we merge together, you basically created yourself a new holding company, right? That's owning now each of them individually. And obviously, with each of them, you can also agree on different operation agreements on how each and every one of them is going to continue to operate or not, what kind of synergies you're going to have, what kind of upsides, cross-selling. There's a lot of things we can expand on that, right? Because with what I told you about merging everyone in their EBITDA, that's assuming we're doing nothing with those businesses. That's assuming we're not saving costs on like think about it this way. If you find two businesses in the same city and both of them have office spaces, one of the things you can save a lot of money on is just bringing everyone to one office. And you just saved yourself potentially six or whatever the office space size or cost is. You can save yourself multiple 6 or sometimes 7 figures a year in just office costs. And there's a lot of different expenses in businesses and duplications that you don't need in two businesses, and you can save and keeping it just in one. So he's basically getting 20% cash, 80% stock in the new holding company. And the ideal scenario is someone is telling you, you know what, I freaking love what you're doing. I'll just give you my stock and I'll grow with you, right? So you give him a stock in your new company, in your new entity, in the holding company, and you just swap your shares, which is probably a really good sign, because then you know, okay, this guy is all in with me. He's going to grow the business in the future, and it's really, really exciting. So I thought I'll mention that a bit about some of the ways to structure it, because that's probably one of the questions that people have. So let's quickly validate the sector in the few minutes we have. I'm not sure that I'll do that, but I might just give you the sheet, because I need to figure out how am I doing that with this iPad thing. So this is ideally what you want to do and how you want to validate the sector. So again, rank everything and then have some summary, right? So I have like a sum, right? Pick your numbers. So when we decided in the sector, what I would say even better is combine everything, combine the sector, combine the exit plan, combine the deal flow, and then pick your sector, right? Because if you, for example, and again, rank those. So for example, with marketing, if the exit opportunity is amazing, you have tons of public companies out there, right? Or you know what, let's do this. SaaS, tons of public companies, home service, marketing, let's say 8. But let's say deal flow, you're like, man, I don't know how do I going to get to those business owners, right? Trying to think about a sector that might be, even SaaS companies, like a lot of them, the challenge you might find is that a lot of them are being backed by venture capital firms. So deal flow alone might be very, very challenging. SaaS or anything, marketplace, for example, marketplaces, right? Might be really challenging to get to agreements with. So the deal flow work is going to be very difficult, especially if they are being backed by venture capital firms, by investors, because investors, they're in control. Like when you hear business owners that are being backed by VC firms, it's pretty much like them having a boss. They're in control. So it's very difficult to get to agreements with them, right? Or, I don't know, marketing, let's say, I don't know if it's a good idea to tell about a marketing home service, but I'm saying there are sectors, for example, that you define the deals only with brokers. So brokers might going to be more challenging to deal with on this type of deal structure, right? So you want to deal with those things. So you want to think, okay, marketing companies, man, that might be amazing for deal flow, because every marketing company I'm going to message, everyone's going to reply to me. Because guess what? They're waiting in their email looking for more work, right? So start to rank those, and then also combine, remember everything we talked about, and kind of like this is just a reminder, anything combining like your passion, background, and contacts, and rank that again, can be the same rank as before, right? And come up with an average and find out like what's going to be the best, and pick your winner, right? Whatever is the winner for you, right? Pick a winner and then make a decision. Okay, am I going all in with this? Am I willing to spend an hour or two a day in the next 6 months or 12 months to create something like that? So hopefully you got some ideas and takeaways today. We're on the hour. If you would like to potentially work on a roll-up like that and get my support and potentially my investments, and especially if we're going to do an IPO, I'm willing to take the cost of the IPO on me, which is in the multiple 7 figures. Private message me or post on Facebook, So ideally post your sector on Facebook and we will reach out to you, or just private message me on Facebook. I think I have my link here. Yeah, just those are the links. Private message me or just email support@acquisitions.com. Also, if you have any questions about that, I might create more training on that, because this is what I'm most excited about right now. This is what I'm focused on. This is where I'm putting my time and effort. And I'm looking to find more great people to support, teach this in an extended way, and then partner with them, with my capital, with my time, and support them to be successful and get results like Michael. Yeah, I think there's no reason for us not to do it in pretty much any sector that we can pick and want to pick. Because in the end of the day, there's only so many deals that I can see on my own. And a lot of you here are in different geographic locations, have access to different networks or different skills or different backgrounds. And when you bring those backgrounds and your geographic locations, I think with our skills, our contacts, our access to the right people to help us do that, the sky is the limit. And that's my goal here. The vision here for me and acquisitions.com is I really wish and I see a world where we can have dozens of you as partners in roll-ups like this, like Michael just finalized. And I want to see us partnering with tons of you in different sectors and creating multi-billion-dollar operations out there. Because in the end of the day, when you see all the biggest companies in the world, biggest public companies in the world, I'm not talking technology, but there's a lot of public companies in the boring sectors that are very traditional businesses that a lot of you are already running. I saw here when we just started the training, people here run marketing companies or construction companies or engineering companies. Guess what? Or home services companies. There's a lot of those companies that are public companies that are trading in the multi-billion-dollar range of valuations, right? Or trucking companies, like thinking about, or plumbing companies, like all those random sectors that are not sexy. They're not the next Tesla, They can make a lot of money, they can create a lot of jobs, save a lot of jobs, help people with retirements, because a lot of baby boomers are going to retire in the next few years. And I think we can really help them and build a lot of wealth for ourselves. And also at the same time, create a great community of people who are just excited about building something meaningful and have fun and build tons of wealth for everyone and enjoy the process. So yeah, that's the end, guys. Again, if you have any questions on the process or you would like to potentially work with me on this, message me on Facebook or just email support@acquisitions.com. And also, if you're not in the group yet, just go to Business Buying Mastermind on Facebook. We're going to post a lot of content and potentially future workshops like this. Post your sector. If you did the training that we did today, I'd love to see your tables. I'd love to see what you picked, or what would you like to pick, or maybe your deal flow calendar, or maybe your exit table, like starting the end in mind. Yeah, so with that being said, last chance, private message me on Facebook, and I'll now stop the recording, and I might stay for a few minutes just to see what questions we have. Let's see, I'll go through the chats from the beginning because I didn't see anything. Let me know in the meantime if you enjoyed it, if you like that, if you like to, if you like what we talked about, because I know, I don't know, man, if you're not excited about 62 million in EBITDA and creating potentially a multi-billion-dollar operation within less than a year, I don't know what is getting you excited. All right, let's see what we got here. Okay, so I see a question, how do I network with you? Yeah, just private message me on Facebook, Moran Pober, and message my private account. There's few fan pages. I'm not there. I'm on my private one. All right. I see one. I'm just going through the first message when we just started. So let me go to the end. The principle apply to any size of roll-ups? Yes, 100%. How much is your masterclass support program? Yeah, Diego, message me. We have it's very personalized, so message me on Facebook, and we'll see what makes sense if we can help at all. Just to clarify, you are looking for joint venture partners. I'm looking for people to learn this process first of all in an extended way, and then yes, I'm looking to partner with people and invest my money alongside it. But yeah, I definitely look for partners in this. Go back a few slides, please, to owner options. This, okay, great call. Thank you, Casper. Thank you, Moran. This was great. Thank you. Have you worked with the energy sector? Not yet. I'm actually looking right now. Someone just reached out to me with something in the solar space. Renika, awesome. Amazing offer. I love this training. Thank you. Great introduction to a nice concept. Thank you. Great overview. Thank you. Thank you. Great info. Thank you. Thank you so much. Thank you, guys. I appreciate it. It was great. To rewatch, yeah, we'll try to upload or send an email about the recording. Also about the slides, yeah, we'll post in the Facebook group about it. Yeah, we'll try to post a recording or post it in the Facebook group. Michael, you want to go to the owner options slides? Let me show you. Let me just share my screen again. I'm doing it for you, Michael. Share it. I assume you're talking about this one. You have 3 seconds to screenshot that. 1, 2, 3. But yeah, we'll share with you. We'll give you the option to. We'll share with you the slides in the group. It makes sense. Sweet. What is the mechanics between finding a company and then collectively selling? Or when basically to acquire the company, or what basis we acquire the company? Yeah, we acquire them on the promise that we'll do that. The book is sitting on my desk. Which book? Oh, the compound effect. Nice. How to integrate it or just collect entities and sell them off? Yeah, good question. So it really depends on you and kind of like what your exit plan, right? So if you're going to take it public, obviously in the end of the day, you want to do some kind of integration and make sure that everyone operates on a merged way. 60 whatsoever number targets is secured. You could refuse to merge, maybe ego reasons sometimes. The purchase agreement for the 16 companies is not executed until they raised capital to pay the 5x. Exactly. Renewable energy construction. Sweet. Yeah, renewable energy construction. Those are all great. So technically, you could end up billionaire if this is done right. Nice. Yeah, that's the goal, man. For each company, you have to buy strategic parts from roll-up entity in mind to create a 32. For each company, you have to buy strategic parts to form a roll-up entity in mind to create a roll-up. I'm not sure I understand if there's a question here. How to integrate this? Okay, hopefully I answer that. Will there be a replay? Yeah, we'll try to post in the group. Do you raise capital separately to buy each of the 5 business? Not necessarily, you can do it together. Love it after you keep the 15 million it takes over the running of the company. We hire a management team to take over. It can be either. There's a lot of ways for us to structure things post-deal. Please send me the slides later. Okay, sweet. I think we went through a lot of stuff. Okay, see some more new messages. How to roll up when you have bought a franchise company. They don't want you to work with other companies. Yeah, franchise is you have rules, so it's a bit different. It's a bit difficult there. Could you tell me more what this might look like working together on a roll-up strategy with your guidance? Yeah, just private message me, moran@acquisitions.com, and we'll talk to you. I'm looking to learn firstly how to acquire and works and also this process. Yeah. Can you clarify this? The purchase and sell agreement for a 16 capital. How do you integrate? Yes, it's basically contingent agreement, Alex. My intention is to become a pro at this. Good job. That's the good start. And how do you How do you, these companies, do you collect and sell? Okay, so answer that. It's really good training, very excited, working on acquisition of precision machine business in the UK. Wasn't very successful in deal flow. Your calendar sounds fantastic. Thanks. Yeah, no worries. It was late, gonna be a recording. Yep. The acquisition program. Da, 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 da. Yeah, Sam, just message me on Facebook if you have questions. Okay, sweet. I think we're good then. All right, everyone. Would you recommend finding deals through brokers or for roll-ups? Not, no. Because it just, I mean, you can, but it's just going to be another hurdle, another. Oh, 1 second. There's a Q&A. Let me check the Q&A stuff. Okay, so how vital is the sector? Hopefully, I went through the sector stuff in the training. How did you raise it from 50 million to 100 million? Good question, actually. The bigger the business is, the more it's being valued at. As simple as that. Like the more profits you have, the more a business is worth. How long it normally take to close a deal? Really depends. I mean, heck, I know people who close the deal within a week of learning about acquisitions. What is the cost for your help? Message me on Facebook. We'll see what we can do. Brokers are fucked up. I was working with 2.0. I lied after I saw numbers for myself. I'm excited for this opportunity. You read about it. Oh, I know, John. I didn't take a company public yet. I'm saying right now, and that's why I'm willing to put money myself on this deal, and that's why I'm partnering with Michael on this. The reason I want to partner with you guys is because I want to put my own money in taking a company like that public. I did it in the private sector though. Can you send a reply out to emails, please? Can you send a reply out to emails? What that means? I'm very excited. Thank you for sharing all the documents today. Looking forward to the future. Sweet. Cool. I think I went through all of this and all of this. I get confused about buying a company making 1 million and paying 5 million. I get confused about buying a company making 1 million. I mean, you need to pay. Good question. When a business is making 1 million, I mean, you need to pay him some. Usually, I mean, there's a lot of ways to value a business, but one of the ways is basically multiples of profits. So that's pretty much it. That's why we pay 5 million on a business doing 1 million profits. All right, cool guys. We're gonna end on that note. The link to the Facebook group is in the chat, or just search for Business Buying Mastermind. And yeah, thanks again. Thank you. I appreciate it. Thank you, everyone. Take care. Have a great evening, and have a good one. Bye bye. Take care.